Hi everyone, Michael McVety, President of Red Fortress Property Management, back and again happy to be here. It's been a little while since I did a rental analysis. This one is going to be for the second quarter of this year, 2025, and I'll tell you, I always like to update numbers. I'm doing it regularly, but I'll tell you, it's been a very busy couple of months over the summer. Hopefully, it's been great and busy for you as well. But for those of you that haven't seen recently, I've been doing, I did a Zoom call a couple of weeks ago with clients and other landlords on how to rent in a down market. You can check it out on the blog. I've been also involved with doing a similar presentation with our local property management chapter and showing where the numbers were and why. I did a little bit more in depth than this presentation because I'm trying to, truncate all the material in for you guys. Also, last week or 2 weeks ago, I guess it was on an expert panel here in Southwest Florida for our chapter again with four other great property managers from all over Florida. Great people on it. Had a wonderful time. And so now I'm back. I wanted to give you a whole bunch of information with regards to how is Southwest Florida doing? How is Fort Myers, Lehigh? When we're talking to clients, prospective clients, even other property managers asking, hey, Michael, how's it going out there? So this is what the overview is for today. So again, how we normally do this, for those of you that haven't seen this before, is I normally start with national news. And I do that for a couple of reasons. First of all, national news sometimes conflicts with what's happening at the local level. So sometimes you'll hear things like, oh, man, we need to build more homes, or there's a shortage supply. And you see that on some national news broadcasts, NBC or CNN or Fox News or something like that. And then maybe something that I say or somebody else says to you doesn't really make sense. So sometimes the national news can conflict with the local. But the thing about the national news is that it has, oddly enough, national implications. And so when people are talking about interest rates or mortgage rates and that sort of stuff, that's at the national level more so than the local level. So first of all, we're going to talk about what's happening at multifamily, then single family at the national level. Multifamily does sometimes trend in advance to what's happening with single family, as well as lets us know a little bit more on the supply and demand side because multifamily obviously builds a larger scale. Then we're going to get right into the local rental markets, what's happening in Fort Myers, Cape Coral, Port Charlotte, Naples, that sort of thing for April, May, and June of 2025. Then I'm also going to go into a new feature, a little bit excited about how low can you go? And it's going to talk specifically about certain types of the market. So in other words, where's the bottom of the market? And finally, very quickly, I'll talk about a little bit more of the interest rates, market corrections, tariffs, and so forth. And then I'll tell you what's coming up shortly because again, I'm trying to synthesize a lot of information here, but I'm going to tell you about the next video, and I think you guys will really be interested in that. I'll do that right at the end of this video. So real quickly, let's go into multi-family occupancy. So here we are. We're talking right now about seasonally adjusted occupancy rate. Looking over here now to make sure that my little red dot over here is where it should be. So again, just to let you know, it's a couple of things about this. Right now, the occupancy rate is just between 93.5 and 93.0 at the national level. Okay, that is at a 14-year low. Okay, so that's a 14-year low, so that's not good. We want the occupancy to be higher because that would mean there's more profitability in that for the multifamily industry. But at the same time, listen, guys, these lines are at half a percentage point, so let's not think it's crazy. But obviously, you can see from the time that we had with COVID 2021, it's the occupancy rate has gone down by several percentage points at a national level. Okay. Let's take a look at multifamily concessions. So obviously when things are going great, they don't offer concessions. When things are not going great, they offer more concessions. So you can see obviously as we start going by months here, you can see that there is generally speaking a trend upward where once again we've had continued escalation of concessions for the multifamily industry. And again, this is at the national level. So let's take a look a bit more at the single family supply and demand. So right now, multifamily occupancy, to summarize, is low, 14-year low at about 93%, which is not horrific, but obviously they want much higher, and that they're starting to offer more and more concessions at the national level. The national level at the single family Let's take a look at the single family supply and demand. So again, this is talking about seasonally adjusted, so that's important. Okay, it's talking about the renter demand versus the supply, and you can see right now we're starting to get into the negative category. So what that's referring to is that we're creating more supply than demand right now in the last couple of months. So that's not great. In other words, we're starting to build more and more, and the supply is not keeping up. That means that there would be more properties on the market for rent. And how does that show up in different stats? Let's take a look at the single family home days on market. That's what DOM is. Okay, so this is again by Zillman and Associates, a very pretty graph here, but the prettiness ends there with the colors, because right now it's talking about the average days on market, 40 days on market nationally. So what that means is that if you came to a property manager anywhere in the United States, on average, from this survey, and there's like hundreds of management companies, pretty big sample that they take here, they're saying that whether it's New York, Florida, or Oregon, or California for that matter, the average day on the market is 40 days. And if you take a look at it, that's like right in line with the most ever, which was back not that long ago. So basically, this is not a stat that we want to hear. That nationally, there's a lot of problems. Now, some areas might be better than others. Okay, I got it. But I'm just saying to you, nationally, when people are saying, "Oh, there's not enough homes for rent" or something like that, well, you're starting to see some stats based on hundreds of property managers that are saying, "Well, actually, you might want to watch all the building that's apparently going on because we are having 40 days on the market on average for vacant units. That's a lot." Okay. So, and again, we're going to get into the local levels, and are we doing better than that or worse? Okay, let's take a look at the single family new move-ins. Okay, so what this graph is interesting. I try to give you just a snapshot on some of the information I get, but the roughly 1/6 of the contacts are saying that they're experiencing negative new move-ins. And what does that mean, negative new move-ins? Like the people aren't really nice? No, what they're talking about is financially. So say, for instance, you had a property at $2,000, the last move in. When the person moved out, a new person's coming in, it's now less than $2,000 that they're renting that property for. That's about a 1 in 6, 1 in 7 actually, actually 1 in 6 now of what's happening nationally at new move-ins. So 1 out of 6 nationally, the rents are starting to go down. Okay. So, like we talked about last month in a Zoom call, how do you rent in a market like that? Well, again, you can go look at the blog or the website, that sort of thing, and I can show you what Red Fortresses does because we still are renting properties. All right. Also, let's take a look at real quickly the single family lease renewals. All right. So when we look at the single family lease renewals, how are we doing? So again, they're talking about how it's coming down at around 2% increase. So in other words, if somebody renews, okay, what happens with that lease? Okay, so basically we're seeing a little bit more flatter growth. Okay, so it was great back in COVID. Obviously, people were staying still. There was a lot of fear of what was going on there. You're starting to see that obviously over time it's gone down, and now we're closer to 2%, which is right in line once again. Unfortunately, when you look at here, one of the lowest levels in 14 years. Again, so that's flat growth nationally. Again, this is not coming just from Red Fortress, it's coming from hundreds of other management companies giving them the data. Let's take a look at single family home new move-ins. Again, you're starting to see very similar 2% at new move-ins, the growth rate. Okay, now this is pretty interesting, this stat, because from the multifamily perspective, what we're seeing is a lot of people, when they're coming up for lease renewal, they're increasing it, say 3%, more than actually single family home lease renewals. So what they call that is like kind of like a pay to stay. Like you're paying for the privilege of continuing to rent from us and not move out. Isn't it better for you to stay as opposed to move out? So we're going to increase it by 3%. But what's interesting about multifamily is that when new people are moving in, there's no growth. It's actually lower, right? So they're offering you increase to stay, but when people move out and they're trying to re-rent that property, it's actually staying the same or lower. Okay. Now for a single family home, what's interesting is that they're saying it doesn't matter whether you're trying to move in, new or renew, it's at the same level. So that's interesting. So there's a little bit of a different thought there for single family home. Like, no, it doesn't matter whether you want to stay or not. We're only increasing it slightly for both people. That's different from the multifamily. Now, U.S. real estate prices. Let's talk about how getting a little bit more local, unfortunately. I'm going to give you some bad news. Don't shoot the messenger here. But so we're talking about U.S. real estate prices right now. And this is from another source. I like the graphic. They're talking about cities with falling property values. Okay, and I've talked about this last quarter. So when you look down, here's where we are. I put a little red line here to help you out here. Unfortunately, when they're talking about being at negative 8%, that's where we're showing up nationally. There's also some places in Texas as well, but we are definitely showing up in the negative annual price declines in terms of property value. So what does that mean also for U.S. rents? Very often in our area, it's similar. So when we look at the U.S. rents, cities falling, you're again seeing we are in a very, very unpleasant area. Also seeing a little bit north in Florida here, and you're seeing a couple of other places, but the worst areas right now is exactly where we are. So when we have a client or somebody coming to us and saying, hey, how easy is it for you to rent a property? I'm just letting you know this is at national people looking into our area, not even looking at people like myself and so forth, where we're looking at data. These are people that are also observing and saying, wow, this is probably not an easy time to rent, in the Southwest Florida area. So giving you some different stuff. I always try to mix things up a little bit with these analyses. So we're going to look at a Florida Gulf Coast University next 2 slides, talking a little bit more about our local area. So it's a very well-known university here locally. So what's interesting here is that they talk about the local sales right over here, family sales. They talk about the home sales decreased by 4% year over year. So they're comparing May to May, not like May to January or something like that, where you can have spikes depending on the time of year. They also talk about the median home price. Okay, the average basic home price is down 10 to 19% year over year. Okay, they also thought was interesting is that they're talking about this one stat again. The number of active residential listings up for sale is up 33% year over year. So there's more properties, a lot more properties being on the market for sale. The median price it's selling is down from 10 to 20%, and that again, the actual number of sales are down 4% year over year. It's not compared to last month; it's compared to last, say, May in this case. Okay, so what's also interesting, I thought, was still this consumer sentiment index. So in Florida, people are still very happy. The sentiment is still positive towards the state of Florida. Maybe it's in part because the economic conditions are still great in Florida, even though we're looking just at a slice of real estate only in terms of like what I try to do for our rental analysis. But generally speaking, the economic activity in Florida is still very, very good. In fact, they just passed a state budget that's actually $3 billion less than the year before. And it's kind of like just comparing apples to oranges, but the Florida budget, the state budget, just to give you an idea of how things are different, say, than New York State. I thought this was very interesting. I heard this from 3 different sources, but Florida has more people, 20% more people living in the state than people are in the state of New York, and yet Florida has less than half the state budget of New York. Less than half the state budget. So again, when you're talking about economic area and activities and stuff, people are still feeling very, very optimistic in Florida. And then here we go, local sales and values for again, Southwest Florida. We're talking about the median sales are down 3.7. Okay, so again, they're talking about Southwest Florida, 3.7 down year over year. And again, just another stat, they're talking about that the median sales price is down 13% year over year. Again, I'm going to show you right here. But what they also say, though, and keep this in perspective when you're talking about sales, it's also up still 50% compared to May of 2020. Okay, so again, some of you might have heard, and I don't want to get into too much, but the Wall Street Journal saying how terrible it is real estate wise in Cape Coral, and our local kind of realtor group said, hey, that's not fair. Well, this is kind of like a little bit what they're talking about. They're talking about the year over year change. It's down. It's terrible. It's like 13%. Sales are down between 10 and 20% of value in that. But again, what the Realtor Association was saying is, yeah, but compared to 5 years ago, we're still up by 50%. That's pretty darn good. So when you hear stuff like that, again, that's why I like to kind of compare national versus local news and how sometimes one looks at one trend and the other person looks at the other trend. I just want you to be aware of it. All right, so what I wanted to do is give you a big overview of locally what's happening with our rental market right now. So I thought I would break this down by graphics. Don't worry about the numbers because I'm going to show you the numbers like I normally do, but let's talk about the graphics here. So here we are. We're talking about Red Fortress information for Fort Myers. So this is what we do here at Red Fortress. We're looking at stuff. So this is, again, a graph from October, November, December, January, February, March, April, May, and June. You can see that the big bar here is the total number of 3 bedrooms. Why do I choose 3 bedrooms? Is because 3 bedrooms are the most desired places to rent. So if those numbers are increasing for one reason or other, the demand is not keeping up for the supply, or the supply is not keeping up for the demand, it will start to change. And the 3 bedroom is the biggest way to look at this, because whether you're a single person, whether you're have a spouse, 2 people, you have roommates, you have kids, whatever the case is, 3 bedrooms are equally desired by this group of people versus like a 1 bedroom, where obviously not everybody can live in a 1 bedroom. Okay, so you can see here the big graph here is the total number of 3 bedrooms. This blue area down here talks about 3 bedroom homes, 2,000 or less. And then this slight light blue area is properties, the number for $1,700 or less. I just want to show you a graphic representation of this, and then I'll show you the numbers afterwards. But then you can see kind of like how, generally speaking, we started to have a downward trend in December and January, and now overall it's starting to increase again. What's it look like for Lehigh? Lehigh, you can see it's just trending up. More and more 3 bedroom properties are coming on the market for rental, period. Okay, so that trend speaks for itself. How is it for Cape Coral? And again, I'll show you these numbers very shortly. Just graphically, you can see Cape Coral also very similar to Fort Myers and Lehigh. I mean, a lot of numbers coming up here. Again, you're also starting to see what's interesting here is the number of 2,000 or less properties that are here. So when you compare that, say, for, again, Lehigh very large, and then you look at, say, Fort Myers very small in terms of numbers, right? But again, you're seeing a lot of properties starting to come down. You see this blue area, 2,000 or less. Typically, it's starting to get larger and larger as people start to adjust the rents down. Okay. And then also Port Charlotte. This is interesting for me because Port Charlotte, for the longest time, has always been very, very even keeled over the last, say, 6-7 months. You start to see a slight uptick. Now you're really starting to see an uptick in the number of properties. You're also starting to see a larger uptick with the number of properties $2,000 or less, and even $1,700 or less. And then finally, an area that I want to talk about, Naples. You can see that has been very, very steady and almost zero in terms of 2,000 or less properties, but still 1,400 properties on the market for rent, just at a much higher price because of the price point in Naples. So again, when I look at this, and here's now the numbers that are no longer graphics, but getting into the area that maybe some people fear math-wise and numbers and going, oh my gosh, what are you going to talk about now, Michael? But just a couple of important aspects to this. Again, I take it from a single source. Don't get bogged down with the numbers like 505 versus 497. What we're looking at is overall trends. So by focusing on one reputable source, I do this, on a monthly basis all the time. You're seeing the trends, and let's take a look at the trends. I showed you graphically, but again, when you're looking at, say, not just month over month, but even from May to June, look at the number of 3 bedrooms available in Fort Myers, 515 to 697. Okay, that's a pretty big trend right there. You're still seeing a lot of properties available for 2,000 or less, even 1,700 or less. People are starting to have the rents drop so that people can rent for 3 bedrooms in Fort Myers for $1,700 a month or less, and it's at 24. Cape Coral, you can see this is a big 1,300 plus properties, 3 bedroom or more to rent. You're at 400 properties, 3 bedrooms to rent. That's also like kind of affect North Fort Myers too. With in terms of 3 bedrooms to rent. So I mean, you have $2,000. You have 400 rental properties to choose from in Cape Coral. A lot of surplus. Lehigh, less in number, but they're still trending very, very high. Lehigh tends to be square footage wise cheaper to live in than Cape Coral for a whole bunch of different reasons. But that's basically the case. So you can see even there, almost half the properties here right now are for 3 bedrooms, $2,000 or less. So you can have a very nice home in Lehigh Acres, a gorgeous home. I know we have a couple that are available for rent, and the problem is that you have 300 other properties that are available for rent for $2,000 or less. So it's just a very tough market. Port Charlotte, like I said, started to trend up a little bit here. 378 properties. That's kind of like a big increase. Compared to last month versus the month before. 126 now. So now you're starting to see even in Port Charlotte, people are starting to say, you know what, property's not renting very quickly. Let me drop the rent. And now you're up to 30, the most in 8 months, $1,700 a month, or rent a property in Port Charlotte for $1,700 or less. And then finally, Naples, again, not much sliding there, but you are starting to see, the properties are not kind of going up or going down in Naples. It's just kind of treading water right now, which is pretty unusual. Now, next thing I want to do is, so some people are saying, well, geez, Michael, like, that's not great news. Sorry, don't shoot the messenger again, but I'm just trying to be factual so that you guys see what Red Fortress and other people are dealing with here. Okay, so in other words, we do a lot of things to rent our properties, compared to landlords and so forth. But again, this is a very difficult market right now. Not as bad as 2006, 7, and 8 when I was here, but still a very difficult market for us to rent as a property manager because there's a lot of competition. So what I wanted to do is I wanted to focus on, hey, so where is the bottom of the market? Like, can people rent, properties for like $150 or something like that? So this is where, how low can you go? How low are people willing to rent their property right now? And what I did was I broke it down into Naples, Bonita Springs. By the way, I'm going to be including Bonita Springs next quarter in the analysis as well, because your Bonita is different from say Naples, and it is different from Fort Myers, and so I wanted to start introducing that dynamic here. We're going to have all kinds of specific information over 2 quarters for Bonita Springs starting the next time I do this video. Okay, but so what I did was I said Naples, Bonita Springs, Fort Myers, Cape Coral, Lehigh, Port Charlotte. Okay, like $1,500 a month or less. How many properties do we have? And what I mean by that is, I'm not talking about like taking a 3 bedroom home and then, having a common like kitchen area and you rent out like a bedroom and stuff like that. That's not what we do here. I know some people like it, some investors like to do that and break it up, having almost 3 units instead of one, that sort of stuff. If you want to ask me what I think about that, email me, Mike at redfortress.pm.com. I'll be happy to talk to you about it. Yes, you can make money at it, but it comes with a lot of legal risks to it. Okay, so but basically, I didn't want to include those types of deals. I'm talking about, is there a 1 bedroom or a 2 bedroom, 1 bath that people could rent at for $1,500 a month or less? And what I did was in May, there were 5, believe it or not, 5 properties in Naples that you can rent for $1,500 a month or less, the lowest being $1,450. Bonita Springs, you can rent 2 properties for $1,500 a month and the lowest was $1,500. Like, it was basically Bonita Springs. It was even wealthier than Naples in that regard. Like, no, sorry, you're not going to get anything for $1,450. You're only going to get it for $1,500. Fort Myers, 69 properties that you can rent for $1,500 or less, and the lowest was $800 a month. Cape Coral, 46. The lowest you can rent was $850, typically a 1 bedroom, but sometimes it's a 2-1, small 2-1. Lehigh was 23 properties, and then Port Charlotte was 24. And then when you look at June, the newest one, Naples pretty much the same. Cape Coral went down a little bit, so there was a little less inventory that way. So it looks like people are starting to rent those properties, okay, which is good. You need that. Okay, ultimately, like eventually as a landlord or as a property manager, you might like to see all these numbers at zero, okay, $1,500 a month or less. If you're a renter, obviously, no, you'd like to have cheap, affordable rental properties. Cape Coral actually increased, believe it or not. Lehigh increased slightly, and then Port Charlotte went down. And then again, I just kind of indicated, hey, how low are people going? So you can see that, at Fort Myers, around 900 is the lowest. And again, you're talking between 900 and 1,500. 60 properties still available in Fort Myers, okay? Cape Coral at 800, that sort of thing. So again, I'm going to keep tracking of this to see, hey, is the bottom like kind of staying there? Are we going to continue the slide? is the bottom going to start pushing up a little bit? And when it starts to do that, that will obviously expand how much we might rent a 3-bedroom property for. So again, I was here in 2007, 8, and 9. I saw stuff, and you're saying like, Michael, gosh, like, wait a second, my taxes are still high, my insurance is still pretty high. I'm going to have a video as well about insurance because a lot of things are going on in the state of Florida that I think you might want to know about, but I'm not going to get sidetracked here. So in other words, it's hard for prices to go lower, but when somebody is saying, listen, my property's been on the market for 2 months, I'm not getting any hits, I have to keep going lower and lower and lower, this is exactly what we're looking at. There's a bottom point where eventually the properties are going to rent, and then once that inventory gets absorbed, that's when people start to raise their property. So listen, we're not even close to being as far as we were in 2006, 7, and 8. Trust me, like, you can split some of these numbers in half, and I'm not joking. Okay, you can spread some of these rental prices in half, and that's where we were back in 2006, 7, and 8. So just a final bit of thoughts. Okay, on kind of like interest rates and what, what's the economy and everything about it. And I like to give like a balanced perspective. For me, it's not really about, honestly, about politics. It's about what's factually happening. Okay, so let's talk about the economy real quick. So the first quarter was down. It was actually revised down. At first, it was like 0.1%. So like, the economy shrunk barely in the first quarter. They revised it downwards to negative 0.5%. So it went from 0.1% to 0.5% in the negative both. So it went down a little bit. Right now they're thinking the quarter's kind of going to be around 2.5. We'll see. It's going to come out probably in the next month. And if that's the case, that's kind of like typically standard for what the quarter or the economy growth looks like normally. Okay, local unemployment, so that also affects interest rates. So how is the economy doing? How are people's jobs? Right now 3.8% in Lee County. That's still very low. National is 4.1, that just went down, but Lee County, we have no problems, knock on wood, in terms of jobs, right? That's very, very important. Okay, energy costs have an effect on inflation. So how are we doing with inflation? How are we doing with oil? Well, despite everything that was going on all around the world, in Asia, in the Middle East and stuff like that, we've actually had very stable prices here locally. I don't know where it's like with you, but here it's actually gone down slightly. Today it was like less than $3. It was more like $2.85, right around the corner from where our office is. So we appreciate that. So the good news is that the oil is kind of like staying the same. The energy costs are staying the same. That's important because that's making inflation stay the same. That's a big thing on what they look at in terms of reducing the interest rates, and the interest rates obviously affect mortgage rates, right? To some extent. Again, in a previous video, I don't want to go over it, but basically the treasury bills, what we sell our debt for, is important for how they choose our mortgage rates, right? So right now, the mortgage rates are kind of holding, and you're probably going to see the mortgage rates continue to hold for the next little while, unless something unusual happens, like the inflation rate starts to go down and that sort of thing. Okay, so like I was saying, in summary, is that the mortgage rates are going to stay the same. And right now, because of obviously the surplus of rental properties, the surplus of properties up for sale, this is a great time to certainly buy a property for rental purposes and investment purposes in Lee County, as long as you know that right now the rental rate for that is going to be lower than normal, and then eventually it's going to increase over time. So right now it's a great time to buy properties for sure. Now, having said that, upcoming video. So the upcoming video I'm going to do in the next couple of weeks, I hope to put it out, is kind of like a little bit of what's happening with the supply side and construction with multifamily and single family homes in kind of Fort Myers, Cape Coral, Lehigh area. So I've done a lot of like, what are the numbers, but what's it going to look like in 5 months or 6 months or something like that? Are we going to have a lot more people moving in? But more specifically, what are we actually building or not building in Lee County? Are things starting to slow down? What's it look like, Michael? That's what the next video is going to be. So I think that you're really going to enjoy and seeing it. Like, hey, is it speeding up, slowing down? Have they totally stopped building in Lee County because of all this data? I'll let you know about that shortly. So again, if you have any questions whatsoever, always reach out to me, Mike@redfortresspm.com, Mike@redfortresspm.com. President of Red Fortress. I look forward to your comments. You can agree, disagree. Always love the feedback, and I do get feedback, so I appreciate that. And also, you can go and subscribe to our YouTube channel, so this way you would get notified when I add something. Or what you can do is go to our website, redfortresspm.com, and click on the blog button, and then it'll show all the stuff from the Zoom session I just did, which was about an hour long, broken into 4 segments, that sort of thing. So again, always trying to give content that informs our clients and also landlords and other people in the area. So I hope this has been informative for you, and I will see you next time. And again, email me if you have any questions or topics that you want me to cover. Have a great day. Thanks, guys.